morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, November 26th. Markets had a little bit of a pause. Dow Jones up about 7, Nasdaq up 3, S&P down about 2.5, and Russell down about 19 cents. So we just really kind of pulled back, paused a little bit, ever so slightly, and we're still hanging around the current highs here at the moment. So it's going to be interesting to see what happens and how the week finishes off. We have a lot of econ data today and tomorrow, actually, just before the Thanksgiving holiday. Now, we usually get, I've mentioned every once in a while, we usually get like what we call a holiday reversal, and markets usually reverse the current trend, which right now is up. So it's going to be kind of a toss-up here, I'll be honest with you. Usually this week is a bullish week going into the Thanksgiving holiday, and Friday actually kicks off. Black Friday kicks off a seasonal strength for the next 3 to 4 weeks. So it's going to be a little bit iffy to see what happens. But we are at extensions. We are at lofty levels from long-term resistance now from 2009 lows. So anything could really happen. I would not put this would not really just kind of discount that we might not get any kind of a little bit of a pullback here. Obviously, the markets are in dire need of a pullback at the moment. It's kind of ludicrous that we have no selling at all going on. I mean, we can't even get really a good 3-4 day pullback down 5, 6, or 8, even 10% for that matter. So, which actually gives me a little bit of caution. There are warning signs and red flags all over the place, but again, it's not what happens. What the indicators tell us is what price tells us, and right now, price is holding up very well. And we are in a strong uptrend, so I wouldn't fight the trend. Stick to your trading plan. Ultimately, the trading plan will prevail. So let's just take a look quickly. Really, nothing has changed, guys. I mean, absolutely nothing has changed. It was a boring day yesterday, and if nothing sparks today or tomorrow, I think it's just going to be an absolute snoozer this week if nothing happens here. Okay, SPX, bullish percent SPX. We have a confirmed sell signal. Be interesting to see what happens here. A pretty reliable indicator. Now we are on a sell signal, so we have another indicator that's on a sell signal. And here's what the indicators that I am going to show you that I'm going to be watching even more so in the coming days and weeks. Okay, so here's the bullish percent. We are on a sell signal. Okay, here is the tick, and the day tick back down below 0. Interesting. So if you look at it, if you really kind of study this thing here, we haven't been back down here double in quite some time. We had one blip lower, October 9th low, boom, back up again. And it'll be interesting to see if we can continue to hold 0. But this is definitely something I'll be watching is the end of day tick, as well as the intraday tick too, during the trading day. But here's another good one. That's the tick. Okay, take a look. Stocks above the 50-day moving average. It is on a sell signal now. Just got back on a sell signal, ever so slightly, but it is on a sell signal. So something again to keep an eye on. Not saying to go out and short the market, but it's on a sell signal. You just got to put that and file in the back of your brain just to see if the market does start to roll over. Now remember, we were up a good 8-9 handles yesterday in the pre-market and sold off pretty much all of the move in the pre-market session when the market opened. So that wasn't so great either. So it looks like to me, I think that that this market is a little exhausted. Now you can say. Before we get into the chart segment, you can say that, well, wait a minute, there's a lot of money on the sidelines. I'm sure there's money always on the sidelines, and really, to me, that doesn't bode well for me saying, oh, there's money on the sidelines. Well, that's great. Yes, that I do think that a lot of money managers and hedge fund guys are a little bit behind the curve, and they need to kind of play catch up between now and the next 4 weeks. I do think, though, but I also think that we are at lofty levels, and smart money, I don't think they're going to be pushing their money, putting their money to work at these levels. If they have a decent year, I would think that they would be more protecting what they make than trying to chase performance here. Unless if you do have fresh inflows come in again and push this market higher, then that may change. But until then, I don't think that's the fact at the moment. Now we have 3 to 4 weeks, and we do have tax selling that starts to come in, that kick in the last couple of weeks of December. So just keep that in mind as well. All right, so back to the indicator. We have the VIX. I'll be keeping an eye on that. As you can see, the Bollinger Bands are tightening. That tells me that we are looking for a bigger move as well. And to me, I think the big move is going to be to the upside. I don't think it's going to be to the downside in the VIX. If the VIX actually moves higher, the markets will move lower, okay? Stock exchange, New York New York Stock Exchange new 52 low, 2-week lows, starting to increase yet again. Now, it was slow. It was only 3. But this is the area that I'll be watching. This chart, more importantly, I'm going to be watching, okay? Now, I showed you yesterday, but I don't have it today. New York Stock Exchange, new highs, new lows. Really didn't do much. I'm not going to bore you with any more details that I've shown you yesterday. But this is a good area where I want to see this break. If this starts to break out and stocks above the 50-day moving average are breaking down and moving lower, and the tick is moving lower, and the VIX is moving higher, well, there you go. There's going to be our cue that now we'll look for price. If price is now making lower lows, lower highs, you might have a tradable top in place, okay? And I mean just a local top, nothing that I would be too crazy about. We could see even further new highs going into the end of the year. Keep that in mind. Okay, another interesting development we talked about was gold, right? Gold. I like gold short. However, I said I'm not shorting gold here because it is in support. Gold did have a reversal yesterday, okay? And now I think gold could actually run up. And this is a counter trend trade, so if you're not used to counter trend trade, I would stay away. But if you are familiar with it and you're very comfortable with it and it's in your trading plan, then, you know, a takeout of yesterday's high in gold, 1250, which I think it is actually higher in the pre-market this morning, I think you could see 1280, 1300, which would be an ideal spot to look for a short setup. And I mean look for a short setup. I don't mean just actually prices touching 1300 to go out and just go out and short the market. Okay, that would continue to make a lower high in series. That will keep the bearish symmetry. And then from there, I think gold can actually really plummet into the 1,000 to 1150. Remember, gold in the longer term is in a bear market at the moment. Okay, now why do I think gold may bounce? Well, palladium. Palladium is the silent leader of all the metals. Palladium is the guy right here. We do have a confluence area of resistance, as you can see, the 50, the 50 to 200, and of course the 20 is way up here. But if it can get back above and at least try to challenge these highs, then I think gold will definitely follow suit and will move higher as well. Okay, WTI, crude. Crude actually gapped lower in the pre-market, actually Sunday night into Monday morning because of the Iran nuclear deal with the U.S., but actually oil recovered nicely, as you can see in this candle. We are at 20-day lows. I think oil can actually move a little higher. But again, here's the area, 95.50. Have a little bit of resistance up here. We can break 95.50. We can actually see 98.50 in the coming weeks in crude oil. I like crude for a long trade setup. I really do not short crude only because of the geopolitical risk, unless it's a day trade only. I'm not looking to hold anything overnight in crude, but you can look at the USO or buy out of the money calls if you're not looking to buy the stock. But I still like this area. If we take out 92.43 in crude, all bets are off to the upside. Crude oil will continue lower, and the next area of support would be somewhere in this area here, this little support area of about 92-ish, okay? And still have support. So 92.43, 92-ish, you know, break really below. You want to give it a little bit more room. 92 would be the ultimate line in the sand, and then I would just basically hold off and reevaluate it. Remember, we do have bearish symmetry, lower lows, lower lows, lower lows, lower highs, now basing. So this is a nice little base all the month of November. So if we can get a big breakout here, I think you can really see crude oil rally to at least 2 points. And we do have, as you can see, our indicators pointing higher. So we have some positive divergence, RSI, MACD, and stochastics. So we are doing quite well in our indicators. Now we just need to see price move up. Remember, price is what pays us. All right, so let's get into the chart segment. I'm going to run through these. Nothing has happened here other than the fact that spiders are testing the high, testing this uptrend channel, the lower end of the channel from the 2012 lows. So we do have some resistance up here at the moment. So easily could break through it, and then we would be testing the other channel here, which would probably come in right about here. Okay, so let's just keep an eye on what's happening here. Remember, keep an eye on everything. The whole, keep it as one whole. As you can see, Dow Jones totally stretched here, basically way out extensions in a Bollinger Bands. Really needs to come back in, even to the 8 to the 20 is right at the 157. I mean, really needs a little bit of a break. I mean, we've been up from literally from the October 9th. I would say, I believe, don't correct, please. I'm not sure exactly, but I think it's 3 to 4 days down. and like 35 or 38 days up. It's just insane. Here's the transports again. At our extent, we have our uptrend channel. We're at the upper end of the range, and as you can see here, not saying that it can't go higher, but remember, we're extended, and we are in dire need of a pullback. And a lot of the volume has been on low volume this rally. Okay, Russell again still sitting within the channel again. So to me, I think Russell has a target area of at least challenging the highs, maybe even making new highs again. But again, we're overextended in the daily chart, the weekly chart, and the monthly chart. And when you get that, that's when the market will surprise you. And it will surprise you. Remember, markets do not go straight up. And although it does look like it has, and it almost did from October, but I think that the markets need a pullback. And if it does happen, then I could say you can buy with conviction, and that the markets will indeed move higher and make new highs. Not that it can't. It's just risk is really to the downside at the moment. And I like to see a pullback to at least reset a lot of these momentum indicators to at least in neutral territory. XLF, excellent chart. We call the breakout up in here. When this move happened, we got a little bit of a pullback, and then boom, we took off. I still like JP Morgan, I like Citibank, and I love Goldman Sachs. And as you can see here, Goldman Sachs is almost at our target when we were calling it in here, and that's just about 170. Actually hit our target intraday. So I would not be looking to chase Goldman. I would not be looking to chase JP Morgan. Here's JP Morgan and or Citibank. As you can see, this it literally is out of control. Let a pullback come in. Let it come in. Let it test. Let it make a higher low from this low here, and then see where it goes from here. Maybe even fill the gap if you're lucky, and then look to buy the banks. But banks are in buy mode. Banks are in play. Higher interest rates are going to bode well for the banks. So definitely look for the banks on pullbacks. Look to build positions going into 2014 is a great idea. And we have the IGN. As you can see, we are moving higher. We're still in this bearish setup, which the head and shoulders pattern. We're still okay with it. But again, we don't want to be taking out the right shoulder here. So this bearish pattern is still valid, but really not going anywhere, as you can see. And of course, the market is kind of stalemate as well. Apple, really not doing much of Apple. Again, I want to see movement. When we break out, look at the Bollinger Bands really contracting here. So we'll expect to break out or break down in Apple. We just don't know which way it's headed. Obviously, we've been consolidating here pretty much the end of October to all of November here. So Apple is definitely ready to break out. Let it break out, follow the trend. And lastly is the Qs, as you can see here. A little bit extended here. And I think also it's in need of a pullback. Okay, guys, that's really about it. Today, tomorrow should have a little bit of movement. And then after Wednesday, obviously Thursday, we have Thanksgiving. And then Friday's a half a day, which there will be no morning call on Friday as well. Okay? Have a great day today, guys. Be safe out there. We'll talk to you tomorrow. Take care.